Friday finally gives us a little bit more to think about outside of earnings. With the tariff announcement and the failure to make a deal with Iran, markets were notably volatile, and we did close the first bearish daily bar in the S&P. However, the NASDAQ, it still looks absolutely fine. Now the question just becomes, is it enough to prevent a major top? And should we still be looking to buy pullbacks? So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points, we'll answer those questions, and we'll try to build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 4 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off today on the SPY monthly time frame now that the April bars have officially closed out. What do we see as it relates to candle structure and location? Second candle in. Well, we've certainly got a solid green-bodied bar with a very impressive close at the highs of the monthly range. There's really not enough lower wick to read into from a psychological perspective. In terms of the bar-to-bar count, a very clean higher low, that's pretty straightforward and bullish, and a blowout higher high as we know, closing completely above the previous month's range as well as just a brand new all-time high close. Buyers really go 2 for 2 in an easy way on the bar-to-bar count. And generally speaking, the overall dominant trend of the monthly remains in the upward direction as well. You can see lows, higher lows, higher lows. This is just now a monthly higher low. You can see highs, higher highs, and we just went out and set a brand new higher high. So if the monthly chart were to pull back, that's fine. We know that we can afford a higher low on the monthly time scale. And honestly, I'd prefer that it really just looks more so like a monthly 3-bar play or monthly consolidation, less an actual pullback, right? On the weekly chart, it's probably a clean weekly higher low in here, but monthly consolidation and then continuation over the previous all-time high would probably stage this as the best continuation setup. If we pull back deeper than that, yeah, of course, I mean, this is still going to qualify as a monthly higher low if we go from here to here and overshoot the all-time high, but just not quite as clean. Now, I'm seeing some arguments float around online about the potential for a pullback because of this trend line right here. And oh my goodness, we're pressed into it. But hang on a second, let's just evaluate this logic. If this is going to be the end-all be-all trend line, then why didn't it work here? Right? And you could also come in here, and trend lines are very subjective, which is why I don't really like them. But you just strike a trend line that looks like this from this pivot high. And of course, this is a more meaningful top in 2022. But you see my point. Why not argue for a complete extension into that upper trend line? So not really a big fan of the trend line topping action. If the market is going to pull back and oh my goodness, it's going to be the end of the world on the higher time frames. I mean, we do this exercise every month. Remember that the dot-com bubble bursted when we had a monthly double top. The trend actually changed to down via a lower high on the monthly chart underneath the 20 SMA. Painful moment number 1, painful moment number 2. The monthly trend needs to flip to down, right? And we do the same thing when we evaluate the 2008 Great Financial Crisis. Here is your monthly double top. Here is the neckline. There's your lower high under the 20 SMA. Here's your lower low. The monthly trend is officially down. And then the really painful moment comes. Remember, the saying is, markets don't crash from the highs, they crash from the lows. So let's just go back on over to where we're at currently. You can certainly see that, I mean, there's no chance now for this to turn into a monthly double top. And maybe in the future, there's some sort of, head and shoulders up here, but let's deal with that when and if it actually starts to step up. Let's hit this with a Fibonacci really quickly from last major low, the tariff low, up to the new high. And, as you can see here, this is now hindsight because, before having that high, of course, you would come in like this to the prior high, but generally all of this is taking place. It's shaping up over the Fib 38.2, which in my book technically qualifies as bullish consolidation. If you were to start getting underneath that 38.2, okay, larger issues may start to emerge in the market. Let's get a little bit more granular though and take a look at the weekly time scale and just see what's going on here from a candle structure and location perspective. As we know, I mean, this is again a solid green bodied bar, a little bit more of an upper wick and a lower wick than the monthly bar, of course, but nothing that makes me think, oh my goodness, here comes the bears. A little bit of pushback on Friday, and we'll talk about that on the daily chart in just a moment. But generally speaking, a strong close still in the upper third of the weekly range. And what about the lower wick? I mean, sellers tried to move lower, and that was the main pullback of Tuesday and Wednesday. And yet, where did prices land? Once again, in the upper third of the weekly range. So it's just really not that bearish. As it relates to the location of the bar-to-bar count, clear higher low, clear higher high, and a candle close completely outside of and above the previous week's range. So buyers go 2 for 2 on the bar-to-bar weekly as well. And of course, the dominant trend trend has flipped immediately back in the upward direction via the higher high that's happened over here. As we know, and as we just loosely described on the monthly chart, any pullbacks over the numbers 697, 698, this is clearly territory for a weekly higher low thesis and looking for continuation out of the market. Notice that this level, which we've referenced in the past, it's back down there at the 676, 675 area. It's the bottom end of the balance range that we were stuck in for months. If we were to break down towards that level, there's still undeniably an opportunity here for a higher low, right? From here to here, you could count that as a higher low. It's probably over the rising 50 period moving average on the weekly, but it starts to overshoot the 20 SMA, and it also starts to overshoot now that we've gotten a new higher high, the fib 38.2. You can see how this is kind of in no man's land in the midpoint of this prior balance range. So I don't want to sort of omit the structural relevance, of the 676 level in here and downplay that. It is structurally important because of what it represents from this balance range, but I really would not want to see the weekly chart pull back that deep anymore. My preference would be, of course, the previous all-time high, and then as the 38.2 and 20 SMA start to play catch up, something that's maybe a little overshoot of this previous all-time high. So, call it a little bit deeper, 695, 690, something like that. But probably not all that great if we were to move all the way back down to 675. Again, not the end of the world, still a structural higher low, but raises some questions about the strength of the buyers when and if a deeper pullback does emerge, right? Let's quickly hit this with any confluence from a VWAP perspective, anchored VWAP perspective. Notice that this low anchored VWAP will be better confluence with the 38.2. The higher prices go, obviously the better confluence over time, it will start to support this level a little bit more, the previous all-time high test at 697. So the main bottom line of the weekly chart is that buyers are clearly in control. And if we pull back, there are plenty of reference points for higher lows to keep the trends intact on the monthly chart, the weekly chart, and really it would take a devastating blow to unwind some of the progress that was made off of the major low headed into April. Let's take that off. Let's quickly hit it with a volume profile. And here, we're not really going to learn too much, but I do want a clean drawing to show you something in just a moment. Previous all-time high set is going to be the top end of the curve, of course, as you start to get not much volume into blue sky territories. That's pretty straightforward when you're moving to new highs. But on this cleaner drawing set with fewer studies applied, here is the expected moves, or here are, I should say, the expected moves for the monthlies, right? So in April, we blew through the upper edge of the monthly expected move. You can see it was here at 680, 688. We blew through that, and now the expected move is disjointed for the month of May from April. But what I want to point out is that if we pull back towards the lower bound of the expected move, right here, you're getting decent confluence once again, not perfectly with 697, 698, but you are getting 691.43 as the lower bound. Technically speaking, that's what the options market is priced in. That would be an awesome spot to see if the market could pick up buyers there and start to seek that weekly higher low and monthly higher low for consolidation over the breakout level, right? So just another confluence there as we head into May, something to be aware of. It is the lower bound of the monthly expected move. Let's drop it on down to the daily chart. Let's get a little bit more granular here. The first thing we always evaluate is the weekly expected move. So we just talked about monthly expected moves. Let's talk about the weekly expected move for the next 5 trading days. It's this gray shaded area right here. If you're not familiar with expected moves, check out the video tutorial in the top right-hand corner. Overall, this strikes me as being bullish, right? The upper bound tells us that if we're contained, it's going to be 731.52, and that, of course, is a new higher high in the trend count. It's a new all-time high as well. Bullish for the trend. Of course, the lower bound is at 709.78, and considering that we do not have a firm higher low the entire way higher, because this was not an hourly downtrend and this was not an hourly downtrend, then fine. This could easily act as the next higher low in the trend count. Once again, 709.78. It's not bad, although I would prefer that the market would support here over the top end of this balance range and the breakout point at 712.40. Now, what's making us talk about this pullback / major topping action in the first place is the candle structure from Friday. I mean, it doesn't take a rocket scientist to see that this is clearly different than anything we've seen through the entire rally higher. This is the first time that the market's made an advance and then completely rejected that advance into the close and then closed weak, right? This was just a notable pullback. This, we actually closed strong after that lower wick. And in both of those instances, we did get a perfect gap fill reversal off of this unfilled gap. Now, I know what you're going to say. Well, look, we're still over Thursday's high of day. It's an unfilled gap. I get it. But there's a bit more of an unwind here with 2 attempts to move higher on the intraday. So let's move on down to the hourly chart here so we could see this. You could see, and actually maybe even a lower time frame. We don't oftentimes go all the way to the 15, but look at this 15-minute double top, right? There was an attempt to advance a second time that failed into the afternoon. You can see that we break the neckline and we just drift lower into the close. Now, once again, I'm not sitting here saying that, oh my goodness, the market's as bearish as it's ever been. We should be looking for this thing to crash, but it wouldn't be unreasonable. We're back on the daily chart for a little bit of a pullback to occur underneath Friday's low, something that looks like this, flip the hourly trend to down. Can we then stage a daily higher low over 712.40? That would be beautiful, right? Right over the top end of this balance range that we broke out of successfully on that Thursday session. So that's one of the things to be paying attention to. If the market's going to be in store for a deeper pullback, probably something that would at least, like bare minimum, start testing that weekly higher low zone over the previous all-time highs, then you're probably looking at more of a pullback that looks like this. We get to this top end of the balance range, we drift into it, and then a rally attempt that fails then does this. Now, what did I just draw? Pattern traders rejoice. Suddenly you're starting to talk about head and shoulders, and you've got your daily trend reversal for the weekly higher low at this zone. Looks like a little bit of a stretch as of what I can see for right now, and the base case headed into this upcoming week is just a gentle pullback underneath Friday's low to get into the top of the range, and we'll see if pullback buyers start to step up for continuation back in the upward direction, some kind of a flag, and maybe continuation to the upper bound of the expected move. Let's drop it on down to the hourly chart. Let's get a little bit more granular here as it relates to the ultimate movement. I don't want us to lose sight. I know I just drew in a bearish pattern on the daily for that head and shoulders, but please, like, what is this? You know, when it comes to technical analysis 101, it's just a bull flag. We got a nice move higher. We've gone sideways to digest the move. It really wasn't a sharp pullback. It was more of just a rejection at the highs there. So in my view, like, if you're just, here would be probably the most bullish outcome, right? You dip a toe into Thursday's range, quickly reject back out of it for the sellers, and then you're here. Great. That's a long setup where you have risk reward back to the all-time high and looking to balloon runners in the upward direction, right? In hindsight, it'll just look like a classic bull flag breakout. Great. If we do start to once again accept underneath that, notice the thin structure. I don't think a pullback's unreasonable, right? If we get this, fine, no problem. This would certainly be where I start looking for the long entries on pullback buys off of 712.40. Now, it's not like I'm just going to have resting limit orders to buy the market down here. I would want to see the actual trend reversal. If we do start to get just solid red-bodied bars, I'm just going to hypothetically draw this in, that look like this, and oh my goodness, then fine. The next step here is to say on any rally attempts, you're actually probably looking for a lower high in this zone, and that builds out what? There's your left, here's your head, and there goes your right shoulder for the ultimate reversal. And once again, that's that head and shoulders we just talked about on the daily. So the main ideas here this week, if we were to just sort of recenter ourselves and boil it down to a couple of simple outcomes, look below and fail on 719.75 is notable because there's thin structure. Sellers, in theory, should have no problem retracing through that. So a higher low back above that tells us that sellers failed here, probably to the high, and if not through the high, for range expansion and just continuation into new blue sky territory, right? If we were to get this Brigade bolt underneath, great, we can get here. First thing to look for is buyers, right? If those buyers do not step up, let it go, and then seek the lower high underneath to then set your risk reward as follows, here and here, retargeting what will become the bottom end of the neckline, so to speak, of that daily head and shoulders. That makes logical sense to me. Let's go ahead and hit this with a Fibonacci coming in from this major low of Wednesday up to the new high. Notice that the 38.2 is loosely in the area of the Thursday high. So again, gap fill reversal that fails to move lower. If it supports roughly around that 38.2, another reason to be bullish there, getting a nice little confluence. If we pull back deeper towards the 61.8, you could say that your long is the reclaim back above this area in here, which is at that 714.50 spot. What was the level we had there? 714.65. Reclaim of that is sustaining the 61.8, which is generally the line in the sand from a Fibonacci perspective. We'll quickly hit this with some intraday anchored VWAPs and see what we have from this point of view. Not much to say other than you're just going to get a confluence of support around the 712.40 as and if markets pull back early in the week based on this gap up anchored VWAP here. As we look left, of course, we're above the entirety of the stack right now. This is probably the most important anchored VWAP up next after that for your weekly higher low thesis, which is confluence with your daily 20 SMA, previous all-time high. That makes the most sense to me. Once again, not forecasting that we get there in the early stages this week. We'll see if we have to talk about it on Wednesday's midweek market update video, but 619 197.84 is the exact prior all-time high. It is also that weekly higher low zone that we just described on the weekly chart. So with that, let's jump on over to the market internals. If you're not familiar with the internals dashboard, check out the video tutorial in the top right-hand corner. What do we see here? I would say the main thing to focus on is just that, yeah, on Friday's session, when we drifted sideways, you had a pretty neutral market at the exchange level. The volume flows were pretty flat. The advanced decline line didn't do anything impressive. The index score stayed green technically, and the cumulative build was a little higher and then a little lower. Does this strike me as like, oh my God, sellers are stepping up in such a big way, the market's going to crash and burn? No, as we went sideways there, I would say at the exchange level, we were way stronger than Wednesday. And remember, on Wednesday, we had that volatility, of course, on the FOMC into the end of the day, but we went just kind of sideways as well. It wasn't like a big down day there, and yet the market internals were worse on that Wednesday session. So not trying to make excuses for the bulls. It's not like the most healthy consolidation. Healthy consolidation probably still has a small green build on the cumulative, probably a little bit more of a build here to like, I don't know, 100 million or so, then you're probably more so flat on this into the afternoon. So again, not trying to like make it more bullish than it is, just seems like normal, healthy consolidation and digestion rather than like, oh my God, under the hood, things are getting absolutely nasty. We also know that small caps had a great end of the week and breadth is technically expanding here. And I think that the market internals would seemingly align with that based on Thursday as well as Friday's consolidation, right? Let's jump on over to the market profile and see what we can glean from this perspective. If you're not familiar with profile, awesome tool. Check out the video tutorial in the top right hand corner on learning a bit more. So generally into the end of the week, did value move higher as the market broke out? The survey says absolutely. Here's Wednesday's value. Here is Thursday's value. And here's Friday's value. Value continued to move higher. Point of controls, notably, clean to the upside in each of these sessions. And I would also point out that we had some single prints on Thursday, right? Those I period single prints in here were not even close to being tested yet. It's just another confluence that if we pull back, a retest of the top end of the breakout point would repair the single print structure from I period. It would also tag up to this VPOC. And, that's a great spot for a higher low. Buyers stepping up here after repairing the structure would tell us that nuanced longs are paying attention to this and trying to get involved. Right? If the market just like blows right through that, then okay, maybe some stronger sellers are actually stepping up. That's loosely in the same territory as the Monday high, right? So if we just go back over here to the S&P just to make sure everybody's on the same page, right? It's this level. If we come back down into this level and we start to get pullbacks in here, 714.65, we saw all the confluences from a fib perspective. We just saw the single prints. It's an awesome spot for buyers to step up and potentially offer us a higher low in the trend count seeking continuation, right? Markets can pull back. They do not move in a straight line for forever, even though that's certainly what it's felt like out of the S&P over the last handful of weeks. With that, let's jump on over to the NQ or the QQQ Cash ETF. Let's hit it from a monthly perspective. We'll do a top down over here as well. We won't spend as much time talking about the .com and '08 reversals, but we do just want to take a look at our structures, of course, and what's going on from a trend perspective. So clear uptrend, stronger bar in my view. The range was a little bit larger. I think it was a historic April for the NASDAQ and the S&P even, but same concepts, right? Clearly in an uptrend, solid green bodied bar, higher low, higher high, and there's room to pull back instead of higher low over the previous all-time high. It'll likely look more like monthly consolidation rather than a sharp pullback. In terms of a trend line over here, we could strike the same ones just to check in. You kind of add it there, but once again, if trend lines are such a holy grail, then like why was there nothing here, right? So not really my favorite type of analysis there, but we'll just at least explore it. Let's hit this with a fib from here to here, remembering that all of this happened over the fib 38.2. And if we just activate this and bring it up to the new high, of course, your 38.2 is just going to be an equal low. So if we're sustained by that, I guess the point being is, say you pull back all the way to this 38.2, an equal low might seem a little scary from a trend count perspective, but still, you're just in bull flag consolidation as you measure the move from here to here, right? That would be A-okay. Consolidation, maybe a breakout at some point in the future. Let's go ahead and clear this up and let's go on over to, let's take it on down to the weekly chart here. And let's see what we could see from this perspective. We don't need the drawings yet. Same idea, solid green bodied bars here, a little bit stronger, which is what we noted in the intro, of course. You're getting more of a hammer candle here on the QQQ versus like in the S&P, we had that wick extension on the top, just a solid close at the highs of the weekly range, bar to bar higher low, bar to bar higher high, candle close completely outside of and above the previous week's range. It's about as bullish as it gets. Let's hit this with a fib from here to here. And our 38.2 is finally starting to play catch up and creep up with the previous all-time high set, which as we know is closer to about 630 if we want to use round numbers. So weekly higher lows absolutely possible in this neighborhood. That would be fantastic. I really don't want to see prices back down to here, but once again, that would be acceptable. Weekly 20 SMA and undeniably a higher low in the trend count. We're using this as the top end of the balance range that ultimately led to the last leg lower. As long as you stay over that balance range, technically you're using previous resistance as newfound support, although once again, my preference would be here closer to that 630. Let's go ahead and take out the anchored VWAPs from the weekly. On the NASDAQ, you can see once again, over time, this will start to creep up the fastest. And then in here, getting better confluence, these will start to move higher over time, but it'll likely be a little bit slower going considering the amount of volume that you have to chew through back here before meaningfully dragging those higher. Notice the volume taper is still absolutely in effect for the NASDAQ. Let's go ahead and reset this to, volume profile is not going to tell us anything, right? You could envision that. The point of control is still in here. If we pull back, that's fine, right? We don't need to do it. Let's take a look over at the QQQ daily chart. Weekly expected move. Sorry. Let's go back to, I did forget to bring up the monthly expected move. Let's just do that real quick on the NASDAQ. You can see in here, same concepts, 634, 635, 630, lower bound of the monthly expected move for May, complete blowout through the April expected move high. And honestly, we're potentially starting to knock on the door of the yearly expected move up there at 724.50. We'll see about 5 months into the year if we can't reach up and tag it. So for now, the main thing to point out is that lower bounds of expected moves are oftentimes met with, I wish I had the historical data. I really only made mental note to start tracking it and leaving it on the chart in 2026. But when you blow out the lower bound of the expected move, expect a harsh move back in the upward direction, right? When you're just kind of noodling around going sideways in an expected move, not much, but the common theme always is on the lower bound of higher time frame expected moves, if you overshoot, expect an overshoot right back in the upward direction, typically as you get that rubber band effect. So if we pull back, this wouldn't be an overshoot, but in here would be a reasonable place to start looking for buying opportunities, right? And I'm sure there's actually, I think, maybe I'll see if I can find it and insert it in post, but a graphic of the JPM collar, when you reach the midpoint of the band of the collar, prices almost immediately get bought back up. It's a similar concept here as it relates to expected move, excuse me. Let's go back down to our daily. There we go. And let's take a look over here. So on the daily chart, weekly expected move is what we're evaluating first in this gray box. We've already pointed to the tutorial. You've got the upper bound at 688.16, clearly a higher high and a brand new all-time high. And this low is at 660.14, a nice higher low in the trend count as well, considering no hourly downtrend, no hourly downtrend, no hourly downtrend. These are soft higher lows, but you could, I hate to be that guy, but you could pull back like this. I would still classify that as a daily firm higher low, perhaps. HL, there we go. Daily firm higher low if we were to get here. Is it also a weekly? Of course, right? Your 20 SMA is there. It's the previous all-time high. We just talked about that level. Nonetheless, notice the difference here on the NASDAQ versus the S&P daily bar. Stronger close with a lack of fade into the afternoon. Seems like the market didn't care as much on the tech front about some of the tariffs that were starting to be rediscussed on the UK autos, as well as the Iran news and then the lack of ability to make a deal there. So it just seems to me that semiconductors and earnings are the only thing to care about right now, and the NASDAQ is proof of that. Just getting a little bit more of a pullback threat, at least as of right now, in the S&P because it's more well-rounded and isn't it is dominated by tech, but at least there's a little bit of energy. At least there's some real estate, staples, financials, communications, right? So that's the push-pull story that continues to be out there. But for now, what else could we ask for other than maybe look above and fail? And if you do pull back, you've got daily higher low opportunity here. That looks pretty straightforward. Look above and go, and you're just targeting the upper bound of the expected move. If you pull back deeper than this, then fine. Maybe you've got your daily head and shoulders that we just described in the S&P. But at that, fine, hourly downtrend's there. As soon as the hourly trend picks back up, heck, is that still a daily higher low opportunity? I think so. I absolutely think so. So those are the numbers. Preference for this week would be gentle pullbacks that support over the balance range breakout over 664.55. Let's drop this thing down to an hourly chart. Let's get a little bit more granular in here. We'll do the same thing that we did on the S&P. And we'll just come in and say, well, first of all, look at the high tight consolidation and we'll see this in the market profile. Look at how flat the top is. That's a poor high, right? Technically needs a little bit of structural repair there versus the ES had some excess on the highs. If we come in with the fib from the low, oops, that's not a fib tool. That won't work. Let's grab a fib tool here. There we go. Coming in from the fibs from here to here, notice that the 38.2 is even above the breakout retest level. It's about a 50% retracement if you were to make it towards that 664.50 spot. So again, look above and fail is fine. getting in here, potential support back to the high, and then through it would be a base case game plan for the coming week. If we do start to just, rally and go, fine. I wouldn't really look to fight that. I might be cautious of new money shorts and pay attention to the push and pull of the S&P versus the NASDAQ. So if the S&P is pulling back more aggressively, and yet the NASDAQ's trying to climb up here, probably not as confident in those new money longs, but certainly not going to fight it. I would short the weak index and try to long the strong index. Let's come in here with the anchored VWAPs intraday and see what else we can glean from this perspective over here. Solid above all of the anchored VWAPs. Nothing to really, complain about from this perspective. We could even adjust this. We'll do a real-time on-the-fly adjustment. This is the 28th. Let's bump this forward to the 28th and see what we got here. 28th. That's the gap down from this session on Tuesday. Notice that you're getting great confluence right there off of the 664.55. I think the levels speak for themselves. The buyers are in control. And once again, your simplified pathing sort of game plan might be look above and fail, pull back here, buyers step up, gap, or not really gap and go, but a successful breakout is fine. If you pull back deeper than this, fine. Maybe you start to target these lows of the range. A little bit deeper is A-OK as well. And then this anchored VWAP would be the next support point there at 650, staying over these prior highs, which also have already acted as support, right? We've seen that buyers are using previous resistance as newfound support. So it just reinforces once again that buyers are in control, first of all, and pullbacks should, as of right now, continue to be thought of as buyable. Let's go ahead and take this over to a NASDAQ side of the market internals. And what do we see over here? We've got ourselves much stronger volume inflows on the Friday session, a little bit better on the advanced decline line. I wouldn't say stellar up here in the trend higher zone, a little bit stronger of a cumulative build, at least closing green on that Friday session. Kind of the same, a little bit of the same, maybe a subtle shift on the bull side here for the NASDAQ side. Let's jump on over to our market profile and let's just firstly start. I want to compare the highs really. Look at your B period excess here on the ES, right? A little bit more of an excess high there. Let's jump on over to the NASDAQ. What you'll see here, and this is the Friday session, right? Maybe not precise with the E period, but much more of a flat top rather than a nice, tapered move that looks like this, putting in an excess high. We didn't really see that. So in my view, this is a P-shaped profile. What does a P-shaped profile tell us? Short squeeze abound, right? So it's not even like new money buyers are pushing prices higher. It's just that anybody who tried to go out short on Thursday completely steamrolled. Right? Absolutely steamrolled. Consolidation higher here on Friday. Value is higher. There's really no arguing with the way that this chart has developed. We've had value here, value here. Value is a little bit more so overlapping, but note the point of control progress, and then just clean breakaway value on Friday. So once again, you could tag up, so to speak. You could come in here, you could pull back. That would be A-OK. Something that looks above, and fails underneath the value area, comes back down and maybe tags the value area high from Thursday, repairs these single prints. No problem, right? And if we just go back and over the structural chart, it's maybe not funny, but it makes sense how this sort of aligns, right? It's the same thing. That's your excess high gets put in, comes in, breaks underneath value area low from Friday, pulls back through the thin structure. These are the single prints from Thursday. And where do we pull back to? Thursday's value area high is basically right here, the previous breakout point. So to me, makes logical sense looking for something along those lines and then seeking buyers at this level. Let's go ahead and move forward from the NASDAQ over to the Russell. Let's just reset this way. Let's go out to the IWM. Let's hit it with our simplified study set, and let's go out to a monthly to check in on what's going on over here. Let's go ahead and grab ourselves a clean drawing set, and let's take a look. So as of right now, solid green-bodied bar. That's awesome. I mean, no real arguing with candle structure and location. Same thing as the other three as of right now. Brand new all-time high close as well. Hard to argue, right? This is just bulls on parade across the board. Now, I will say that if this does pull back, there's probably an easier way to turn this into a failed breakout, something that looks like that. Does there become a monthly head and shoulders threat if rates continue to move higher? That's probably the argument, right? If you look at the TNX, for example, let's go to TNX CGI. You can see rates in here. This is the 10-year, by the way, kind of flagging, if you will. If there's going to be a breakout like over 5% on rates, that doesn't really fare well for IWM. So if rates break out, does this go for a head and shoulders? Maybe, but as we've described in the other two, S&P and NASDAQ so far, let's deal with that when and if it shows up. It wouldn't be my base case forecast. For now, you've got lows, higher lows, kind of soft, and then higher low in here, and of course, a brand new higher high. So there's room for a monthly higher low. I'd be focused on that first before a major reversal. We could hit it with a Fibonacci, why not? from this low up to this high, 38.2, respectful of these prior highs. If you just got monthly consolidation here, wouldn't be the worst thing in the world. I mean, we've gone through these phases before in the Russell where it's done absolutely nothing for a long time, right? So, it wouldn't be unreasonable if rates do push higher that instead of a major reversal, what about just sideways for a while, right? Which on the daily chart, on the weekly chart, yeah, there's going to be downtrends in there. There's going to be a reversal to trade on the short time frames. But from a monthly, what about just sideways? That would certainly be a reasonable bullish outcome. Let's take this thing down to a weekly chart. Evaluate our weekly bar, similar to the NASDAQ, less so the S&P. What I will say, though, is that you did technically produce on the bar-to-bar count a lower low, just kind of an equal high. So more so sideways consolidation, right? And we knew that last week, even the Russell was a bit of a laggard. So nice recovery back up to the highs. Excuse me, the question to me becomes, do we set new highs as we move forward? I mean, we made it through an FOMC where Jerome Powell basically said, hey, no rate cuts for the foreseeable future. And yet here goes the Russell from the lows of the range straight back up to the all-time high. So if the Russell's going to shrug that off, I think you could see this as a tailwind for the broadening thesis in the S&P 500, right? That's really what this has acted as over the last handful of sessions, like the last 3-4 sessions, right? So let's go from here on the weekly with a fib from the low up to this major high. You can see here, confluence 38.2 over these prior highs. That's fine, 263.90s, 264 we'll even just call it. Not really a problem. Over the 20 SMA, bottom end of the range is confluence there. Just like the S&P, probably wouldn't want to go all the way there. Would like to see the prior highs step up as support first. So not the end of the world, but it is on the table as being relevant structurally. We'll hit it with the anchored VWAPs. Why not? We'll skip the volume profile just to save a little bit of time on monthly check-ins. Major idea here is just that this is going to be confluence. This is the same thing across the index products, right? The major low from April, the anchored VWAP to that is going to be confluence in the coming weeks with the prior all-time high retest. That's the bottom line there. Let's go ahead and take this down to a daily chart reset here. There we go. And as it relates to the weekly, there we go again. I missed the monthly expected move. Sorry. Just so you guys have this information, right? I think it's important that I don't skip it. And on the IWM, we actually take a look. You can see over here as we zoom in. Let's maybe take a closer zoom like that. Why is this so? Let's try it like that. There we go. That's a little bit better. The expected move for the month of May is suggesting a move over the yearly expected move. So kind of like the NASDAQ, we're inching right up towards it. Nonetheless, a test of the lower bound that then sort of ricochets like this. I think that's pretty status quo for what we've seen over the last handful of years as a data point for the market. Again, overshoots of monthly expected move lows typically see a retracement hard, and it's fairly normal to blow out the next month's upper bound, right? And as an example too, like take a look at this. Here's a rally that extends cleanly through the upper bound of the expected move, and then you digest for a full month. So could we just be sideways here? Sure. If we pull back, that would also make sense, and I would still be thinking about higher lows, remembering again, a lot of these lower bounds of monthly expected moves are confluence at those prior highs. Okay, probably sound like a broken record at this point, but just giving you all the data points that you need as we move forward into a new month. May is upon us. Let's take a look at this daily chart. Expected move for the coming week's worth of trade, not month, week's worth of trade. We've got 285.62, brand new all-time high, higher high on the trend count, bulls on parade. Lower bound 272.94, looks fine to me. This was an hourly downtrend here, so this is technically going to be a higher low. I would prefer, of course, that we didn't blow out the bottom end of this consolidation, or even this as the consolidation at 273.75, and instead this starts to turn into a more successful breakout look, and we are attempting to move higher here. If we get consolidation, ideally it's over Friday's high, and continuation is over the all-time high. So that's going to be at 276.45, and then over 279.82, the all-time high from back here. A perfect tick right to it on that Friday session. Continuation brings you, again, upper bound of the expected move. And it also is aligned with a little bit of a range double, right? A range double in there should maybe overshoot that by a little bit, but a successful breakout should at least target a 2x, this is 1x and then 2x of the range itself. So that is the upside there. And again, if we pull back underneath the range low, I would at bare minimum start looking for this gap to close, if not potential support near, hopefully by that time. This might shape up over the span of ideally more than a week, would allow the 50 SMA to slowly catch up, and a first test of the 50 after reclaiming it really through a gap over here would be a bullish spot to look for risk reward at 262.65. All right, so for now, Russell is telling us to keep an open mind to the broadening nature of the market rally, even though the S&P 500 is giving us that inverted hammer shooting star, if you will, on the daily. Let's go ahead and grab ourselves the IWM hourly chart. Let me be careful with how I frame that. Grab ourselves. Okay. Let's come from here to here. And let's take a look at the fibs. Perfect. Right over the fib 38.2 bull flag consolidation. Continuation in the upward direction looks a-okay to me. If you start spending time underneath the fib 61.8, yeah, bearish consolidation down here. I'm concerned about a thin structure retracement towards this, which would unwind a little bit of the broadening thesis. But for now, it is not a major threat yet, but we'll have that in the back pocket if it does start to develop that way. Let's hit it with the intraday anchored view apps above the entirety of the stack. Love how this is going to start offering confluence around Friday's low if we do need to balance a little bit further before ultimately attempting to make that breakout move. Let's take a look at the Russell side of the market internals, and then we will move forward into some sector watches. What do we have here? Better volume flows on really Thursday and Friday. Look at how notable they were on Thursday. Once again, broadening out. That is the main take from the IWM. You can see it here on the AD line. Same thing on Friday. A little bit of a lackluster build on the cumulative tick on Friday's session, but again, market kind of balanced a little bit more so sideways. Not overly concerned with the way that that has shaped up. Let's go ahead and take a look at the volume profile through the lens of market profile and see what we could see over here. A little bit of lack of progress is what I would say, but here's maybe the kicker. On the Friday session, right, you technically sweep the point of control and move deeper towards these single prints. Notice that A period, right, does technically close the H singles. You leave C period completely untouched. But the fact that the market bounced off of that just tells me that short-term nuanced buyers are still paying attention to the Russell, right? If you had stronger sellers, you're going to blow right through this structure and it's not going to matter, right? Who cares? Like if you get an order across the desk, hey, sell, $1 billion of small caps, unload the small cap portfolio, big hedge fund, whatever. You're not going to stop here. You're going to go right through it and you're going to get a really weak trending bar and you're going to close incredibly low in the overall range. This is like short-term nuanced traders paying attention to structure, picking it up, buying it. So that in my eyes is bullish, right? If we had stronger sellers, wouldn't have been a strong reaction off of that level. So that's it for the smalls. Let's go take a look at our sector watches here and see what's going on from that perspective. Let me just give this a reset and we'll be off to the races on that. Here we go. Sector watch weekly performance. XLE leads the pack up 3.06%, followed by IGV software. And then we have real estate over here and staples. Those are the three. So it's energy, real estate, staples at the top of the list. Bottom of the barrel, down, the only red sector of the week is materials, XLB. You can see SMH, semiconductors, kind of a flat week, only up about 12 basis points. If we're looking for sectors, though, industrials, 26 basis points in the green, still a laggard there, and utilities, a laggard as well, only up 39 basis points, but still green. Generally, seeing the amount of green on this watch list once again aligns with the idea we just talked about on the Russell that the rally is broadening out. If we had a more narrow rally, then SMH would be up towards the top of the list again, maybe a 9% up week, and then everything else would be red, and that's just not what we got. So broadening out seems to be taking place. Energy, of course, had an interesting day on Friday with the lack of ability to make a deal with Iran. So volatile, but just an inside day on the XLE. What's interesting about this is that it is consolidating over the 50 SMA and the 20 SMA. I would be completely, I wouldn't call you crazy, I guess is what I would say, is if you're looking for energy to continue in the upward direction, sure. It's a nice higher low pullback after a multi-year, I believe, if we just, XOM is the best example, but let's just go out on the XLE. Multi-year consolidation breakout, first higher low pullback from like a weekly perspective, sure. Like not insane at all. I think that you have to be a little mindful of your headline volatility, right? If we just go on over to the CL, and let me double check that this is, yes, adjusted for contract changes. Let's go ahead and zoom down to the hourly chart here. And let me also check this one because sometimes, yeah, there we go. There we are. So the strike threat that was made on, Wednesday, when Trump posted that image/text on Truth Social, you can see that we moved higher, but ultimately to the end of the week, we were lower. Here's the volatility on Friday when, we start to hear things like, hey, the deal is not satisfactory or the terms were not satisfactory, therefore no deal. This is maybe a higher low here. And if we start to push, I would say that this becomes the main point. That's where the market really broke out from on that Wednesday re-escalation, perhaps, if you will. So, under 105.85 is technically keeping the lid on things for now. But keep in mind, failed talks right? We're back above that. We're back above the original 5-day ceasefire on crude. One thing that we'll see as we move through the supporting evidence, maybe I'll just bring it up now because it's relevant as we're talking about crude, but let me just jump over here. This, I think, is notable. So given concerns in the market about higher oil prices, have analysts lowered EPS estimates more than normal for the S&P 500 companies for the second quarter? The answer is no. So I guess the reason I'm bringing this up now is because, and as we described on Wednesday, if you are sitting there as a retail trader, right, and you're like, oh my God, this doesn't make sense. These analysts are so stupid. And oh my God, it's like, okay, hang on a second. Analysts, like we literally just saw that analysts do not care about the price of crude right now, and they are squarely focused on, S&P 500 earnings and this big expansion that we're seeing in earnings, knockout numbers from the Mag 7 companies on Wednesday. It's like, yeah, no kidding that the market doesn't really care about crude right now. It's not the main story. The main story continues to be the AI build out, the semiconductor narrative, and just everything in that AI value chain. All of those earnings estimates are being revised up, right? So that's the main story. Don't get too hung up trying to be fancy about crude. If you're skeptical about it, at least just don't try to short and call a top on crude, I would say. Not call a short on crude. I'm saying call a short on the market because crude is elevated. So mini rant over. Let's just get back on over to the IGV, if you will, and let's take a tour through the remaining bits of the sector list here. Just grab back our 1-year chart is great. What do we have here? Gap and go on the Friday session, noting that we did not close the gap all the way to the downside. I like the close over this little congestion high. To me, this is constructive for a higher low over the 20 and the 50. At some point, software, I believe, will play a role in the AI narrative. Everybody's focused on the hardware component of it right now, but like, okay, great. We built all these data centers. Who are the software companies who are actually going to deliver it, right? So at some point, there will be, I believe, a revival of software, and up and over this as a higher low could be the start of getting involved off of a base down here. So interested in that. I don't know, exactly when and if it will happen with breakout explosiveness and momentum, but for now, Friday's bar is pretty compelling, I would say, up and over this little balance range that supported once again over the 50 and the 20. I like what I'm seeing there. Real estate looks great for the wealth effect. We'll keep moving along through the light sectors today. Staples not breaking down from the bear flag here look really good, reclaiming the 50 SMA. As of right now, Staples, upward pressure. Yeah, they're a defensive sector, but they're not pushing out to new highs. They're not leading the market higher, so that's not really a problem. If we look at financials, this looks great. Just kind of consolidating in here after multiple holds of the 5120. We talked about this in last Saturday's update video, how important it would be that this level holds, and as of right now, it's doing a pretty darn good job of holding that level. Yeah, 200 SMA is acting like a thorn in the side, but for now, as long as we're in this zone and not breaking down, the market can live on. If we could ultimately set this up as a higher low that breaks through the 200, then great. Talk about bullish rocket fuel for your S&P 500. Forget about that upper wick and the inverted hammer suggesting a reversal. Let's go on over to the XLK. What do we have over here? Brand new break, new record highs. Hard to be bearish with the XLK at new highs. XLC needs a little bit of work here. I like the hold on Thursday. Of course, you could thank your Meta Google for that. Primarily Meta, but Google, sorry, completely wrong there. Meta the other way. But Google, thank you. And now would like to see Meta actually step up and at least prevent downward pressure here on the XLC. Ideally, this just gets out to a high. And honestly, I'd be thinking about the XLC, just like we've talked about this concept in the XLY. We'll get there. But what if this breaks out, right? Could this be some of the fuel for the next leg higher of the market if and when semiconductors take a cool off? Maybe. Let's jump on over to the XLV healthcare. A little bit of a bounce here from the H pattern breakdown, but to me, it still looks like a lower high underneath the 20 and the 200, 20 SMA in orange, 200 in green, lower highs, kind of trend line rejection in here. I don't think healthcare is, number one, the place to be looking for big new trades right now. But number two, it's also just a defensive sector. So I don't mind that it's lagging the market here at all. Mag 7 ETF, just to check in on this. What do we have? A little bit of a failed breakout on Friday, but really explosive move off the lows. I would say weekly higher lows that sustain above this are fine. Like you could take a breather here and be A-okay in your Mag 7 ETF. Let's jump on over to the XLY, just like the XLC. Could this go and become the next breakout thing for the market? Maybe. You're going to need Tesla for that, though. And honestly, Tesla did start to wake up on that Friday session, up over 2%. Let's take a look at the structure, though. Doji there on Friday, still over the 200. I don't see any problems with it. Like as long as you could consolidate and go sideways, as long as it's not breaking down underneath, I would say this gap level in the 50 SMA at 114. As long as we're above this, I think that we're doing okay looking for that higher low. And now that Tesla's kind of trying to join the party a little bit. We'll see if this can play nice and do this. And ultimately, that would be a nice trade here over this pivot high at 121.25. Let's jump on over to utilities. Not much to talk about here. It is a lightweight and defensive sector. It's not leading. It's not losing. It's just smack in the middle of this balance range. Not much to say. Industrials, fine. A little bit of a failed breakout on Friday, but my God, if you go take a look at something like Caterpillar, what a silent little stealthy name over here. Caterpillar ripping to new highs. Take a look at Cummins, right? Take a look at your John Deere. JD? No, not JD for, what is it? Goodness, JE? John Deere? John Deere. Why is this one escaping me right now? Oh, it's DE. No, duh. Deere. Like, what the heck's going on? Take a look at your John Deere, possibly about to reclaim its 50 and 20 SMAs. I mean, just not bad over in the industrial space. So I wouldn't get too hung up on this being a failed breakout. I would think that you could go sideways here. Heck, you could look below and fail in this gap and continue out. John Deere could be the next one that's ready to push, but Caterpillar, definitely your leader in that group. Let's jump on over to SMH. JD, the internet company there. Anyways, SMH, what do we have over here? Sitting on all-time highs. Looks good to me. I would love to see consolidation and a continuation out to new record highs. If it does pull back, then that's also fine. The reason I say I would like to see this is because there's a number of setups, specifically on MU and AMD, that would look really nice for continuation there. Also, if NVIDIA wants to catch a bid and stop acting like just complete garbage, then yeah, I mean, SMH going out higher would certainly be helpful. ARM falls into the category. Two trade ideas. I'm not going to say the tickers yet that exist at the end of the video. Those are in the semiconductor space. So this is fine. This is ideal for some of these names. I mean, heck, even this, if you get something that looks like that, probably pick on the weakling, NVIDIA, and then at the 20 SMA, look to say, okay, where's the high or low on the SMH index overall? Here's the XLB materials sector, not much to write home about on this front, sideways smack in the midpoint of the range. Let's jump on into our ratio grids and see what's going on here. If you're not familiar with ratios, check out the video tutorial in the top right-hand corner. XLK continues to be the glue that's holding the market together. XLF needs a lot of work. XLC needs a lot of work, thanks Meta. And XLY, trying for a double bottom-ish look here, but really would be more impressed if that could get up and out over the 50 SMA. It's not the end of the world though, because risk off is looking fine here. This looks fine here, and this looks fine over here. If we jump on over to the B set, A and B set, you can see this looks great. This looks awesome. This looks awesome. This looks awesome. Kathy Wood needs a little bit of work over here, that ARK K, and then the Russell 1000 growth and value also not looking half bad. I'd give that a neutral to check plus, noting that we have reclaimed and are above an upward sloping now 50 SMA. So risk on picture is the name of the game. At bare minimum, it's not risk off. I would certainly, kind of crazy if you're saying, oh, this market's risk off as it's rallied towards the highs. I don't know what world you're living in. Gold ratio looks fine. TLT ratio looks great. That's a risk on indication for sure. You can see Bitcoin's been a bit of a laggard here. It's still failing to break out up and over these highs. We'll see if this starts to go with software. I think if you've learned anything over the last cycle here, it's that Bitcoin has started to correlate with software itself. And honestly, if you think about it, at its core, Bitcoin kind of is a software product. If we look on over at the HG, which of course is not the HYG high yield junk bonds, but rather just the copper market, not really looking great. This is something that if you're bearish, if you're looking for that S&P 500 pullback, you look at this and you say, okay, Dr. Copper here is giving us a little bit of a warning sign underneath the flag lows there at 6.0345. Let's jump on over into some additional supporting evidence like the dollar and rates, a little bit more fundamental over here. The dollar bounces off of 97.97 again. That could be a little bit of a headwind for equities. You can see that rates have remained somewhat elevated here as Jerome Powell basically said, hey, no cuts for quite some time. If we look at the inverted ZT, we'll see the exact same thing, right? Pushing back higher on that Wednesday session and then just kind of settling, a little higher, not unchanged, but just a little bit higher there rather than at the dead highs from the Wednesday session. But just jumping on over to the Fed watch tool, I think it's fairly straightforward. I mean, the market's been pricing in that, hey, it's higher for longer all the way out to the end of 2027, even when you hit the aggregated probabilities. I mean, look at the odds of a cut. They are still way out here in December of 2027. So not really a what would you say, momentum-driven market based on the prospect of a supportive Fed. I think that it would be unlikely the Fed hikes rates over here and these yellow odds bump up towards more of a blue section. It doesn't seem like that was Powell's intent. And certainly Kevin Warsh, who is now really teed up to get in there sooner rather than later, his intent certainly is not to hike rates. That would be a massive disappointment to the administration, I'm sure. Although, as we heard from Jerome Powell explicitly on Wednesday, Fed independence is going to be the name of the game walking forward. Let's take a look at the calendar here and see what we got last week. I'd say that it wasn't bad here on the ISM PMI overall, staying over 52. The bad part was that prices paid were a little bit elevated. Some volatility there, but the markets didn't seem to care too much about that. It was all about the headlines on Friday morning, of course, as it relates to the tariffs and the no deal with Iran. As we look forward on the calendar, this is what we really care about more so. ISM services PMI in a service-based economy, service prices are going to be the thing to read into, not necessarily those good prices. You can see here, JOLT, it's the start of a new month, so earnings data is upon us. ADP non-farm, you can see here on Wednesday, and then as we scroll forward, jobless claims, the usual, there it is on Friday, the full Monty labor report, jobless claims, unemployment rate, non-farm payroll, that's the non-ADP version, and hourly earnings to see if we are in a wage price spiral. That's the big question there. For the most part, it seemed to me that so far the week over week claims are not really doing anything all that detrimental. I mean, a massive beat on last week's weekly claims. I think that we remain contained on the upcoming Friday session. I don't really think that we see a big break to the top side on the unemployment rate. Let's jump on over to the earnings calendar. Busy week last week, but it's a busy week again this upcoming. You can see Palantir is probably the main event on the Monday after the close. BWXT also a little interesting. As you can see moving forward, what do we want? Shopify, honorable mention. PayPal, honorable mention. Oh, honorable mention here, perhaps. Cypher, honorable mention, sure. DigitalOcean is absolutely a watch. That name's been really strong recently. AMD, of course, is where everybody's eyes will be. Same thing with Light. Next one to hit 1,000. SMCI, honorable mention. ANET, honorable mention. What else? ALAB, maybe a box around that one. MSTR, honorable mention. Tempest AI, maybe. What else? I'm going through this for the first time with you. So this is, where is it? Your Cypher and your Hut 8 probably move in sympathy to one another. What else? We've got Coherent, of course. IONQ for Quantums, sure. ARM, absolutely. Box there. AppLovin gets the honorable mention. Fastly, yes. And what else? Irene, CoreWeave, AAOI, Optics, sure. In a loaded week, Datadog, wow. A lot of stuff. Black Sky, wow. The dark horse. Coinbase, Open Door even isn't, the Eric Jackson call. Honorable mention, honorable mention, honorable mention. Rocket Lab sneaking in down here. RCAT sneaking in down here. It's a loaded week again. Might not be your Mag 7s, but certainly a lot of market moving themes, at least, reporting this upcoming week. A little quiet on the Friday open. Wendy's, no thanks. TeraWulf, sure, absolutely, for the data center play. And I think we'll leave it off at that. A loaded week here on the earnings calendar. A lot to talk about. So we'll watch out for all of that. As it relates to the earning insights, we just looked at this statement, but I will just scroll up to here for a second and show you this visual. This just gives you an idea of why the market moves higher, even though crude is doing what it's doing, right? The Q1 26 earnings growth rate year over year is just exploding in the upward direction, right? And again, this is the earnings growth rate, not the earnings themselves, but the growth rate of earnings is huge in the upward direction. And for that reason, right, markets are like, hey, we got to reprice this. We're off to the races here. We could scroll all the way to the bottom of this report, all the way to the bottom. Bear with me as we get to our dashboard. I'm looking for our PEs, forward PEs. They're coming up soon. Here we go. Getting closer. Forward PE. Nope, I want this. Yes. 12-month forward PE, it's moved higher, but we've seen higher more recently. That's, I guess, my main point, is that we're not overcooked from a PE perspective. It's that earnings have actively been revised in the upward direction. If we just go back up here, I know we're scrolling all over the place, but look at look at this. Like, I can't underscore this enough, the fact that these revisions are higher and to this magnitude. So it's, again, like, forget about your crude for a second here. Don't try to be a hero and short the market because of that. The market just underwent a huge repricing based on earnings. That, to me, is what this is all about, right? Finally, we shrug off the Iran war stuff, and like, maybe we're close to that ceasefire and things are slowing down. This is what the market now cares about. And we've been posting about this on X kind of nonstop. And if you've been sort of fighting that, then I don't know, just ask yourself the question. Did you get any exposure in this rally? Did you not? Are you short? Are you trying to short the market? How's that going? Are you getting steamrolled? Are you being tactical? Are you in at the right time, out at the right time? Are you playing that game? I don't know. Just, to me, the fundamentals align with the technicals at this point, and oil is becoming less of a player. That's what I got for you on the fundamental section of today's show. Let's get back on over the platform here. Let's go through our supporting evidence. Bond impulse from an inflation perspective, breakout reversed on the Friday session here. So keeping a very close eye on this IEF TLT. If it really starts to extend higher, red flags will emerge, but we're not doing it yet. It's right at the cusp of being a major threat. Here is the LQD HYG ratios for your proxy to credit spreads. And you can see that we're still doing all right. No problems here, lower and lower. Yes, flattening out, but as long as we're underneath the 50s, no problems on that perspective. Let's go on over to junk bonds in isolation. You can see this is divergent, and just like copper, I would say if you're a bear, you want to be really ringing, the bell and shouting and hollering about the junk bonds. There you go, like bearish divergence in the purest sense. The question just becomes, again, has that really worked over the last little bit? Not yet. Not yet. At some point, it will realign with markets, but you can see that this is one of the longer divergences that we've been dealing with over this entire thing, right? HYG lit the way the entire time back here, but this is one of the longer ones where it's not technically proven correct. So we'll keep that in the back pocket as a data point. Let's go on over to the breadth ratios. You can see breadth looks good as of that expansion into the end of the week. RSP, nice day. Here on the Thursday-Friday combo, and the QQQE out to new highs. Let me just maximize this pane so we could see the new highs versus lows also pushing up and out here as well. Breadth expansion. Once again, the IWM has done a great job of acting as a proxy for that as well. Let's go on over to, where is it? VIX volatility. Continuing to melt on volatility, which of course is bullish, but let's start to become a little bit aware of the complacency effect. If we do start to drift into the 15, you're a little bit more susceptible to a shock. That could be a Trump tweet about tariffs again that are more meaningful. It could be a, hey, we actually did go through with a strike and we're back in the thick of it with Iran. It could be something that we don't see yet, that the market doesn't see yet. And you always just have to be aware of that when and if you're just complacent at 15. So we'll keep that in mind. Let's go on over to our VVIX. Melting here, not really doing anything overly concerning yet. And we'll jump on into our vol futures. Still in contangos up here, contangos over here. A little bit of a pop on the one-day VIX for Friday, but that makes sense given the catalysts that happened intraday. Let's just reset this, and then we'll just jump on over to our core list of companies getting into the nitty-gritty. All right, NVIDIA kicks us off. This thing has acted like absolute garbage. Semiconductors continue to push higher, and yet what does NVIDIA do on Thursday? Straight down. Nice thin structure retracement. The thing I'm watching for is, does this turn into a head and shoulders, short-lived breakdown, short-lived, as Powell would say, and then do we get bought up off of the weekly breakout point? So I'm watching 193.25 like a hawk on NVIDIA. 20 SMA offered a decent response in the first test on Friday, but you didn't really follow through from there, right? It would have been way more constructive to stay above it, go inverted head and shoulders on the hourly, and then break out like this on Monday. It's possible that that still happens, but to me, the slightly weak close on Friday would sort of suggest an overshoot of the 20 might be more required than this is your reversal, right? So that's it on NVIDIA. If we do consolidate in here, this is a trade that I would like to participate in. Something like that, risk reward wise, 202.50, 208 as the target. Let's go back to dailies. Let's hit Apple. Really funky bar on earnings there. Huge upper wick. Yes, it is a real upper wick there from Thinkorswim. And I don't see this as really being a top priority until it settles in and develops a little bit tighter structure in here. Could be gap fill reversal off of 275 as a watch, and then 280 reclaims for a long. That's a possibility, treating this as a daily high or low. We'll keep an open mind to it, but for now, it's, again, just probably not a top priority into the early stages of the week. Let's go on over to Microsoft. This is much better. I like the fact that this reclaimed the low of the consolidation. I was thinking that it was going to be weaker after the follow-up to earnings and just overshoot of the 20, maybe 412 rejections for this. Not the case. So I'm not going to count that as down and out. There's still some world in which, maybe it's a full gap close and then you're here, right, for this, retracement to the 50. But if we're over 412, I don't want to be premature on the short, basically, is what I'm getting at, because of the reclaim of this and the way that, once again, with software acting the way it is, if this is just a higher low for Microsoft, I don't want to be on the wrong side of that if we're over 412. So that is the idea here. And maybe for the long, it's like you trade for the gap close and then look to run it up towards the top of the range. That's a possibility. It's going over to Amazon. Amazon just completely the Wild West here with those massive ranges on Thursday and Friday. I like the inside nature of Friday's bar. I like the fact that it's consolidating over 264.25. Do we get this? And this becomes the next question. If we pull back a little bit more deeply, that's fine. I would look for a weekly high or low, daily high or low up against the 20. It's not really there's undeniably an hourly downtrend just considering the magnitude of that Thursday bar, but you didn't really take out these lows, right? So I'm a little hard pressed to say, Is this still a daily higher low in here? Maybe up against that 247. I'd be keeping an open mind to it. Let's go on over to Google. Google looks awesome. It's probably the best setup I can see walking forward into next week. It is extended, yes, 9 times its ATR from the 50 SMA, but as we take a look at the hourly chart, I mean, how could it not at least be a day trade attempt on a bull flag up and over the all-time high? If your risk is going to be like this for a move into the overnight all-time high, regardless of where we're at extension-wise on the daily chart, I'm probably going to try to take that trade. So that's Google at 386. If it's short-lived, then so be it. It would be pretty straightforward as a short on a failure back down underneath that flag low at 381, in which case the bears can start salivating over this gap that exists underneath us. But Google, probably the best of the Mag 7 earnings from last week, 60% cloud growth on monumental numbers. I mean, come on, just like a unicorn. Alongside NVIDIA, just a unicorn. What do we have with Broadcom? Looks okay. I don't love, you would have had to been right there waiting for it on Thursday, gap fill reversal. Some sideways consolidation is fine over the previous pivot high from back here. Then maybe a breakout. If you do pull back, the 20 SMA is the golden spot to start looking for, shakeouts at the bottom end of these equal lows at 395.25. Something along those lines wouldn't be unreasonable. Metaverse, probably the biggest struggle of the market right now is Meta. You can see the inside day on Friday. It doesn't really leave us a lot to work with other than either we're up and out trying to test this gap above, or we're down and out trying to test this gap down below. So just really wait and watch for Thursday's high and low. That's 621.25 and 601.85. Don't overcomplicate this chart. Do just sort of remind yourself that it is underneath the 200 SMA. You're underneath the 20 now. You're underneath the 50 again. The bears kind of have control as it relates to moving average stack, and obviously the gap down from earnings is a clear outlier from what happened over in the other Mag 7s. Let's go on over to Tesla. Big sort of pop up and out on Friday. It's a little bit more, looking for the rejection of the 50 SMA. If I need to change my tone on Tesla, as we mentioned on Friday morning in the pre-market prep, fine. Some kind of inverted head and shoulders that's forming, maybe. Can we start to find a little bit more acceptance over the 50? Maybe. Is there something to do here? Let's look at the hourly. Let me just sort of show you that this is kind of like noisy back here. Really nice grind. So if there is going to be a trade early week on Tesla, it's got to be here off of 386. Higher low there, then pushing up and out towards this high. That could get interesting. If you fail back below the 50, just total short underneath this level at the 379.85, right? Underneath that Friday low, just goodbye. I don't know how you could look at it as anything other than a short. There's still a lower high. It's a 200 SMA reject and you fail the 50. I would expect the bottom end of the range to come into view as a target. It's going over to JP Morgan for our financials. Looks fine in this consolidation, maybe a little bit of a rejection of the top end of the range. So some mean reversion and bottoming action in here towards the 200 would be welcomed. Something that looks like this. As long as financials don't completely break down, as long as JPM does not close this gap and accept underneath the 50, that seems okay to me on that. Palantir has earnings early this upcoming week, as we saw on Monday after the close. So anything I say can and will be blown out on an earnings gap. Palantir's really come under a lot of pressure recently since this major topping action back here. It's lived underneath the 200 for quite some time now. I don't love this chart. There's a lot of noise in here. In here, when it was trying to break out, it had a moment to prove itself. It couldn't do it. In here, as it sort of reclaimed the moving averages, it had a moment to prove itself. Couldn't do it. Friday, to me, looks like an inverted hammer rejection of the 50 SMA. Again, earnings are going to invalidate much of what I say here on any attempted gap. But for now, unless they report something really, really stellar, seems to me that this is on the sell list, for, unload, take profit on a majority of people's lists. So I don't see much to do with it. Let's just keep moving. Take a look at AMD, a little extended here. You're more than 10x ATRs from the 50 SMA and just pushing out to new highs. So again, as mentioned with the SMH, it looks great if we could get some kind of consolidation into a flag and continue. If we do pull back underneath Friday's low, this would be the spot to start looking for a higher low, the gap up lows from back over here. That was now 2 weeks ago. So 333, 352.70, ideas here and continuation. If you do pull back under the level, you're in here, and then you're looking for this, and then in the future, something that looks like that. If it's going to really have a fall from grace, you probably need to at least, just for starters, need to be underneath 333, right? You could clearly see why, okay? Very unsuccessful for the sellers over there. Let's jump on over to MU, see what's going on with Micron. Nice break up and out through these highs into blue sky territories. This is probably one of my favorite charts headed into the new week. Look at the pullback here that's supported. Any continued consolidation is a beautiful bull flag. It's not, it's extended, right? It's 5x, it's ATR from the 50 SMA, but it's not like 10x. like some of these other semiconductor names. So in my view, consolidation and continuation is the name of the game there. If you do pull back a little bit more deeply, I'd look for weekly or daily high or low attempts here, 471.35 on MU. If you look at SanDisk, and disclaimer, I am long SanDisk, have been for a little while. I mean, MU, right? And then SanDisk. To me, it's just like, okay, look at the huge break on earnings, well received, gap down, but just total bullish engulfer. You know, earnings are a little bit further out on MU, but this just looks like it's just getting started as a break to follow up over this multi-day range from in here. So anyways, I don't want to be overly bullish the name. I think that, again, risk parameters will be key here. It's consolidation, continuation, risk, reward into new highs. I'm not really going to overstay my welcome as a trade, but just looks great. Like the memory theme continues to be absolutely red hot based on all the commentary from the CEOs of the tech companies who are like, hey, memory's like in short supply. Apple is basically like, we got to figure out something to do. All right, let's hit a couple of these additional ideas. Because we're talking about semiconductors, yeah, let's continue to talk about them instead of taking a break from them. Let's go to QCOM, Qualcomm over here. Really big gap and go on earnings and inside day on Friday. I like this as a reference. Remember, this was when they announced their AI chip back here. So let's see if we can get consolidation and continuation over 184. It's a very well-defined breakout point. Everybody and their brother, sister's mother can see it. Over 184 gets really interesting to me. If we drop underneath, wouldn't count this thing down and out. I'd say maybe gap fill reversal, 200 SMA hold for a higher low, and continuing to keep it on the radar as a potential semiconductor play coming up, as a new kid on the block. Look at the volume pattern here ahead of earnings, right? It's like in this gap up segment in here, as the volume was like coming into it, I don't want to say it's like, oh, somebody knew something, it's insiders. No, it's just like people are like, okay, maybe Qualcomm is going to have its day here to join the ranks of the leading semis. Speaking of leading semis, MRVL. It's going over to Marvel. Huge extensions, up 11 ATRs from the 50 SMA, so please be aware of that. But I had to include it in the list just because of the nice inside bar-ish on the Friday session. Let's just come in here and call that at 25. Fine, 165.25, up and out over that, and possible upside there. Keep in mind, the extension means do not overstay your welcome. Like if you try to get involved in this and it starts to flub out and you're underneath the low of day or whatever, you're taking out previous day's low, don't just hold it because it's a semiconductor and it's hot. You will likely find yourself like down here saying, oh my God, why did I get involved up there? When you could just take the loss, come back into it, and then here, right, you've now, I don't know, I'm just making this up, but like risk reward like that, and maybe you're 3x that initial loss, and that's fine, right? So don't overstay it, but really nice inside day there-ish on that Friday session. So liking Marvel as an idea into the coming week. ARM, of course, this was not included in the original 4, but I do want to just continue to remind people that as long as we're over 182, really looking for higher low opportunities in here to set the stage for higher. What would be detrimental in my view, and I would kind of shed a tear, if this gaps up on earnings and is like totally in never land, I don't know, I'm just making this up, but way up here, it's like, what are we going to do with it at that point? It's got to then digest for another week or two, and then it maybe sets up a move out of the base. I don't know. ARM, I don't want to see it become a balloon that's completely floating away. I would prefer that on earnings we're somewhat contained in here, like everybody just chills out for a bit. 182, structure steps up. You could overshoot it, come back above, that's fine. Little shakeout at 182, that's what I would prefer on ARM. Anyways, not one of the original 4 ideas, so let's get back to them. DDOG, Datadog. I just noted the, excuse me. I just noted like I'm the only one in the world. That's not what I'm trying to say. The reason this makes the cut, I guess is what I'm trying to say, is I like the reclaim of the 200 SMA. I like the structure that we have down here. Very organized consolidation. Is this the start of a stage 1 base breaking out into a stage 2 uptrend? Maybe. We do have, of course, our earnings date upcoming, so it's going to be tough to build some cushion into this week, but I do think that we should keep an eye on it. What would be fine here, right? This is different than ARM. If you gap up on Datadog, right, then fine. That's a gap out of a stage 1 base. First higher lows in here looking to go with, right? It's not like we're just getting a gap into Never Land and, the fantasy balloon floats away. So Datadog's interesting to me as long as we're over about 134. Oh my goodness, who let this fly? Who let this fly? Okay, there we go. 134.75, round numbers only, feeling much better. BBAI, final name on the watch list for the upcoming week. Again, possibly a stage 1-ish base. We're still under the 200. That's your red flag. I like the way that this is building out a bit of an inverted head and shoulders. I like the higher low here over the moving average stack, the curling of the 20 and the 50 over something like 425. It's a little bit outside my normal price range where I would tend to play, but something in here could get interesting. Yes, earnings are a problem and probably not going to be able to get some cushion ahead of earnings unless there's a monster, day or reason to get involved on Monday or Tuesday. So BBAI, final trade idea in the watch list segment of this weekend's episode of the Weekly Watch List. And that'll do it. That's going to do it for today's episode and installation. So if you enjoyed the video or learned anything new, let me know down below in the comments section or by giving the video a very simple thumbs up. As always, we will be live at 8 a.m. Eastern Time for another episode and installation of the pre-market prep, building a game plan for the day ahead. That'll kick off again on Monday. Have yourself an awesome rest of the weekend. And as always, I will see you in the next one.